Welcome back to Investing Talk Podcast. Today, we're doing a deep dive into iRobot Corporation. We're working from the source materials you shared with us, some due diligence report excerpts, a financial and strategic overview, their Q1 earnings summary, and a bit of stock analysis.
That's right.
And our goal here is really to sift through all that and pull out the key takeaways from only these documents. We want to give you a clear snapshot of iRobot right now, how they've been performing, their strategy, the risks, where they fit in the market.
Basically, we've done the reading from these specific sources, and we're here to walk you through the important bits.
Okay, so let's get right into it because the recent Q1 2025 report summary that came out May 6th, it paints a pretty stark financial picture. What's the headline number there?
Well, the first thing that really jumps out from the sources is the revenue decline. It's significant. Q1 2025 revenue came in at $101.6 million.
Okay.
And that's down from $150 million in Q1 2024. So you're looking at a 32.3% drop year over year. That's quite substantial.
Over 30%. Wow. And was that decline concentrated somewhere, or was it pretty widespread?
According to the source, it was definitely widespread. The U.S. market was down almost 39.9% to be exact.
Ouch.
Yeah. And EMEA, that's Europe, Middle East, and Africa, down about 27%. Even Japan saw a drop of over 20%, though the source notes that's closer to 10% if you take out currency fluctuations. Still, it shows a global slowdown for them.
So with revenue falling that hard, I assume the bottom line, the profit, took a major hit.
Absolutely. If you look at the GAAP numbers, that's the standard accounting figures, they reported a net loss of $87.3 million. That works out to 2.84 cents per share for Q1 2025.
A loss. Okay. How does that compare to last year?
Big difference. Q1 2024 actually showed net income of $8.6 million. But, and this is important, the sources clearly state that the 2024 number included a $75 million termination fee from the failed Amazon merger. That's a one-off.
Right. So that income wasn't really from operations.
Yeah.
What about the non-GAAP figures then? Do they give a clearer picture of the core business performance?
They do, and it's not pretty either. The non-GAAP net loss actually got worse. It widened from $43 million, or 1.53 per share loss in Q1 24, to a $60 million loss, or 1.95 per share in Q1 25. So operationally, they lost more money this year.
And the sources mentioned they've been missing analyst expectations recently.
Yes, that's highlighted. This Q1 loss of $1.95 per share was significantly worse than the estimate of $1.27 of loss, and Q4 of 2024 was also a miss against estimates. There was a small beat back in Q3 24, but the last couple of quarters show a trend of, let's say, volatility and underperformance relative to what analysts were forecasting.
So with these ongoing losses, what does that do to something like the PE ratio? Is it even meaningful?
Not really based on these sources. With negative earnings per share recently, you don't get a meaningful positive PE ratio based on their trailing earnings. It's either listed as not applicable or it would be incredibly high, basically just reflecting the lack of profit.
Understood. You mentioned operational struggles. How are things looking on the margins and expenses side?
Margins are definitely under pressure. GAAP gross margin fell to 20.0% from 24.1% a year ago. Non-GAAP also dipped from 24.6% down to 22.0%.
Okay.
Now, expenses are interesting. GAAP operating expenses actually went up quite a bit, from $24.2 million to $66.1 million.
Up. But didn't you say they were cutting costs?
But that's where the non-GAAP figure comes in. The sources specifically point out that non-GAAP operating expenses fell significantly, from $76.9 million down to $53.8 million.
Okay, so the GAAP number might include some one-off items or restructuring costs, perhaps, but the core day-to-day operational spending is actually coming down.
That seems to be the implication from the way the sources present it. The lower non-GAAP figure suggests their cost-cutting initiatives are having some effect on the ongoing business costs.
Makes sense. And what about their cash reserves and inventory? How are those holding up?
The sources state cash and equivalents were $112.3 million at the end of March 2025. That's down from $138 million at the end of December 2024. So they are burning through cash. Inventory levels did decrease slightly, down from $76 million to $69 million over the same period. That cash burn is definitely something to keep an eye on, especially when we talk about their overall strategy later.
This is a detailed snapshot, but it's also good you pointed out what these specific documents don't cover.
Right. We have this recent quarterly data, but the sources don't give us, say, precise 3 to 5 year revenue growth trends, you'd need the full annual reports for that.
Things like debt-to-equity ratios, free cash flow trends.
Exactly. Those aren't detailed here, nor are specific return on equity comparisons, price to book, or beta. And dividends aren't relevant. They haven't paid them. Insider trading details would need separate checks too. It just helps frame what this specific set of information provides.
Okay, so that's the financial picture, definitely challenging. Given all that, how is the company actually trying to steer the ship? What do the sources say about iRobot's strategy and its position in the market?
Well, fundamentally, the sources describe iRobot as a global consumer robot company. They're famous for the Roomba vacuum, the Brava mop, really focused on cleaning your home.
And their market position, still considered a leader.
Yes, the sources position them clearly as a market leader, especially recognized globally for these home cleaning robots.
And what's their edge? Why are they the leader, according to these documents?
Two main things mentioned: strong brand recognition. Roomba is almost synonymous with robot vacuums for many people. They were the pioneers. And second, a continuous focus on innovation.
Innovation. Did the sources mention any specifics there?
They did. They highlighted that iRobot launched its largest ever new product lineup in early 2025. These new models are supposed to have better suction power, more advanced features.
And the examples?
Yes, they specifically mentioned the Roomba Max 705 vac robot. It comes with an auto-empty dock, launched in North America and some European markets. They're promoting features like up to 75 days of hands-free cleaning with that one.
Okay, so new products are a big part of the plan. What else are they doing strategically?
They're implementing a turnaround strategy they call iRobot Elevate. A key part of this, according to the sources, is cutting operating expenses and production costs.
How are they doing that?
Leveraging contract manufacturing partnerships is mentioned as one way. And there's a note attributed to the CEO about overhauling both R&D and the supply chain, the goal being to reduce costs but still enable that innovation push.
Interesting balance. Did the sources say anything about their product mix? With these new premium models launching, are they selling more high-end stuff?
Actually, slightly less as a percentage in Q1. The sources indicate that mid and premium tier robots made up 76% of their total robot sales in Q1 2025. That's down a bit from 81% in Q1 2024.
Huh. Any reason why?
The sources don't explicitly state why, but it could be related to, consumer spending shifting or maybe inventory adjustments as they roll out the new line. Hard to say just from this info.
Right. So as they're trying to execute this turnaround, who's actually in charge? The sources mentioned some leadership changes recently.
They did. A couple of key appointments announced since mid-March 2025. Kevin Lanouette was brought in as Senior VP and General Counsel. That was effective March 21st.
Hi.
And the sources specifically note he received an inducement equity grant, 120,000 time-based RSUs.
Restricted stock units. That's pretty standard for attracting senior execs, gives them skin in the game over time.
Precisely. It suggests they're strategically bringing in legal and governance expertise. Also, Neil P. Goldman joined the board of directors. His background, mentioned in the source, is in operational transformation.
So bringing in someone with turnaround experience onto the board itself.
Seems like it. While the sources don't detail the tenure of the whole management team, these specific moves do suggest an active effort to strengthen leadership, particularly in areas relevant to governance and turning the operations around during this critical period.
Makes sense. It seems aligned with the challenges they're facing.
Yeah, that's a fair reading based on what's provided here.
Okay, let's zoom out a bit. How does iRobot fit into the bigger picture? What do these sources tell us about the industry they operate in and the competitive pressures?
The consumer robotics sector, as described in the documents, is getting more and more competitive.
What's driving that?
A couple of key trends are mentioned. One is just the general growth in smart home devices. People are getting more comfortable with connected tech, which boosts demand for things like robot vacuums. The other is technology itself, improving AI, navigation, cleaning efficiency are all getting better.
And who are the main competitors breathing down iRobot's neck, according to these sources?
Several are named specifically: Dyson's robotics division, Roborock, Samsung, and Neato.
How does iRobot stack up against them, based on the comparisons in these documents?
The sources frame iRobot as the clear market leader, putting the others in categories like challenger or laggard. They also note iRobot has a high focus on innovation compared to moderate for peers.
But there's always a but.
But, as we discussed, iRobot's recent EPS performance is negative, whereas the sources describe peers as having varied results, some positive, some negative. So leader in market position and innovation focus, but lagging in recent profitability compared to potentially some peers.
So being the leader and innovator doesn't guarantee smooth sailing.
Definitely not. The challenge highlighted is that these competitors are not standing still. They're also launching new products, often with advanced features. The sources mention Dyson's premium offerings and Nito's mapping tech as examples.
Which puts pressure on iRobot.
Right, it pressures their pricing power and their market share. Unless their own new 2025 product line really takes off and resonates with consumers, that competitive heat isn't going away.
Which brings us back to how critical that iRobot Elevate strategy is, the innovation plus the cost cutting. They really need to execute.
Exactly. It feels like they're fighting to defend their leadership spot in a market that's growing but also getting much more crowded.
So, navigating that tricky environment. Let's talk risks and opportunities. What potential roadblocks do the sources identify?
Several are flagged. Potential supply chain challenges, pretty standard for hardware makers. Legal risks are mentioned, possibly around intellectual property, given how much they rely on patents, though no specific cases are detailed in these excerpts.
Okay.
There's a specific economic risk pointed out, a 10% tariff on imports from Vietnam. Since the sources say most of their U.S.-bound products now come from Vietnam, that tariff could directly squeeze their profits.
Right, a direct hit to the cost of goods.
Yes. And then there's the broader economic factor. If there's a downturn, people might cut back on discretionary spending. Robot vacuums aren't exactly essential items for most households, so sales could suffer.
Okay, those are the potential downsides. What about the opportunities? What could go right for them, according to the sources?
The main opportunities listed really tie back to their strategy. First, the continued rollout and hopefully successful adoption of that big new product lineup they launched.
So, banking on those new robots being hits.
Pretty much. Potential for improved sales later in 2025 if those products gain traction. And second, the successful execution of the iRobot Elevate plan, especially the cost reduction part. If they can genuinely lower their operating costs, that's a clear path to improving the bottom line.
The sources also mentioned sort of broader general risks like regulatory changes.
Right. Things like that are always possibilities that could affect any company, but no specifics were given here.
Now, maybe the biggest element casting a shadow right now is this strategic review. What do the sources actually say is happening there?
This is really crucial context. The sources state clearly that iRobot's board of directors is actively conducting a review of strategic alternatives.
And what does strategic alternatives mean in this context?
It means they're considering fundamental changes. The sources mention options like a potential sale of the entire company or perhaps refinancing their debt. Big moves.
And is this tied to their financial health, the debt situation we touched on?
It certainly seems linked. The sources note that iRobot got an extension on a waiver related to its term loan covenants. Those are the rules tied to their loan. The waiver extension runs to June 6, 2025, and they're apparently in ongoing talks with their main lender.
So getting that waiver suggests they might be close to breaching loan terms, adding pressure.
That's a strong possibility, yes. It indicates tight financial constraints.
What does this whole strategic review process mean for transparency and knowing what's next?
It creates significant uncertainty. The sources are very clear. There's no set timetable for when this review will conclude. And, very telling, iRobot did not provide any financial outlook for 2025.
No guidance at all.
None. And they also didn't host the usual quarterly earnings call with analysts for Q1. Taking those steps, or rather not taking them, signals just how much is up in the air while the board considers these major strategic questions.
So how are analysts viewing this whole situation based on the notes? Cautiously optimistic or?
Cautious seems to be the word. The sources suggest analyst price targets might indicate some potential for future stock price growth, but the consensus is that profitability isn't expected in 2025. That uncertainty from the strategic review definitely plays into that cautious outlook.
Okay, let's try to pull all these threads together.
Sure.
Why is digging into iRobot now, using just these specific source documents you were given, so interesting for you, for the listener?
Well, because iRobot, based on this information, is this fascinating case study. You have a company that really pioneered a market, became a household name.
Still seen as a leader, strong brand, pushing out major new products.
Right. But at the same time, facing really severe immediate financial problems, the revenue decline, the losses.
Intense competition nipping at their heels.
Yeah.
Economic headwinds like tariffs.
And all of this is happening while the board itself is publicly exploring fundamental changes, maybe even selling the company.
It's a lot happening at once.
It really is. These sources don't just give you dry numbers. They reveal this deep tension between iRobot's innovative legacy and potential and the very real urgent challenges of its current performance and financial stability. You're seeing a snapshot of a company under immense pressure, trying to execute a turnaround while its entire future structure might be in question. Analyzing that based only on these documents is quite compelling.
So, to quickly recap what we've gleaned from these sources, iRobot holds a leading market position with a strong brand and is banking on new innovation. But it's battling serious financial headwinds, fierce competition, and profound strategic uncertainty due to the ongoing board review.
That sums up the core tension presented in these materials quite well.
Okay, so here's a final thought for you, the listener, to chew on, based purely on what we've discussed from these sources. Given how much iRobot seems to be investing in this big new product launch and how much emphasis is on the cost-cutting strategy, but layered over with this strategic review and the complete lack of financial guidance, how critical is the consumer reaction to these new robots in the second half of this year? It feels like so much hinges on whether those products fly off the shelves, especially when the company's long-term path is so visibly uncertain. It's a real balancing act between hoping for immediate market success and navigating potentially fundamental strategic shifts. Definitely something to think about. We hope this deep dive based on the provided sources was helpful.
If you found this useful, please consider subscribing to Investing Talk podcast, give us a like, and leave a comment with your thoughts.
I'll see you next time.